How's everybody doing today? This is Justin Friedman with Northpointe Bank. The reason for this little webinar seminar is for basically just to share some new programs that we've come out with in the last 6 months. And it's basically mainly because of our foresight of some of the potential changes in the real estate market. We just, as a lending company, want to stay ahead of the curve and be prepared for some of these changes. Some of the changes that we think may potentially come, and in my opinion, inevitably, are a wave of foreclosures. How big that wave is, everyone's opinion is different, but at some level, you're going to have that due to many different reasons. But at the end of the day, there will be ultimately some pullback on the market. Actually, the main reason would be interest rate hikes. But there are a handful of different dynamics that go into this. But in any event, like I said, in order to mitigate some of the changes and loss of production at the times of these changes, we've come out with some programs, portfolio programs that are proprietary to Northpointe Bank. So try to get my screen here to work. Here we go. Here's my team, by the way, a couple of good loan officers that I have with me: Joseph Vidiello, Thomas Romanelli. All right. So as I dive in here, I'll just read some of this stuff off. The difference in the market. A lot of people, like I said, we're predicting some changes. And like I also referenced, we are, trying to come up with programs to stay, you don't want to be like behind the 8 ball. We want to be ahead of the curve. So that's the point of all of this. Obviously, we feel there's going to be some foreclosures in the market. Interest rates will go up. So those are a couple of a handful of dynamics that are, going on. Another thing is that's not on here, it's kind of like the hidden secret, but if you go to a lot of areas, renters are really not paying as consistently as they should be. So, that makes it very, very challenging on investors and landlords, especially those that aren't very well capitalized. So, that's another thing to look out for. But in any event, to jump into the programs that we opened up, number one, speaking of investors, is our investor cash flow program. This product is very, very, it's very good for, if you're self-employed or you just don't want to show your tax returns for one reason or another, because how this program works is it's a no income verification loan only for investment purposes. 1 to 4 family. Okay. Our maximum loan amount is $2 million. It is available for a 30-year fixed rate and adjustable as well. The adjustable, your interest rate's going to be a little bit lighter, but it's still going to be on a 30-year amortization. On these loans, they do, when I say they, the underwriters, they want to see 6 months reserves on top of your down payment and closing costs. Typically, and it's going to be very much dependent on your FICO score, typically down payments are going to be for 25 to 30, 35%. It depends on your credit score. So, like for instance, if you're at a 740 FICO score and above, we'll do 25%. If you're at 6 is the minimum FICO on this program, you're going to be looking at about 35% down. The main underwrite on this file truly is, it's called a debt service ratio. It's all about the rental on all the units, the rent monthly on all the units compared to the monthly mortgage payment, which is principal, interest, taxes, and insurance. If the mortgage payment is such where it's enough to cover, if the rental income is such where it's enough to cover the mortgage payment, the underwriter will approve it. And to get a little more technical, what they're actually saying on this program is that you have to take 90% of the total rent on the building. If that 90% is enough to cover the principal, interest, taxes, and insurance, you're going to get approved on that condition anyways, as far as, you know, the building does cover its mortgage payment and is self-sufficient that way. So this program has been great for a lot of investors I have, especially the ones that are self-employed. We all know how that goes. You know, the tax returns don't always show the strong net income, and this is a great tool to dive into the market. Rents are at an all-time high, so this program really is taken off because the rents are going to cover your mortgage, especially on your 2, 3, and 4 unit properties. So this has been great. All right. The next program we have is for investors and primary residents, and it's actually called the bank statement loan program. The program's been around a little while, but as we move forward in the market, it's really sharpened up as far as what the underwriters will give for income on the bank statements. So at one time, they were only taking certain percentages, and that's changed, but now they're taking pretty much, you know, all your deposits in for the most recent 12 or 24 months. We could do it either way, and using that on your 12 or 24-month average as your qualifiable income. It's great, again, for self-employed people, because if your income on your, you know, if you have a lot of line item deductions on your tax returns, like your Schedule Cs or your 1120s or 1065s or what have you, this program's great. Interest rate's still going to be good too. It's going to be in the 4s. And also, by the way, for the investor cash flow program, that interest rate's going to be in the upper 4s and low 5s too. So it's really an unbelievable product. And the same goes for the bank statement. You're going to be in the 4s for this program. So it's very attractive. Minimum down payment, you're looking at 15% down. And minimum FICO score at this time is a 660 credit score. Okay, so move on to the next program that I'd like to share, which is the non-warrantable condo. This is great, especially I've been noticing in the, you know, since we're New Jersey people, the South Jersey market. It's great for condos that can't get approved through Fannie, Freddie, or FHA. Fannie, Freddie, and FHA, as I'm sure most of you know, are the main government agencies that back the majority of the loan programs in the market. It's what makes up the mortgage industry, or those main programs. This is a portfolio, again, proprietary to Northpointe Bank, a portfolio program. And basically, if Fannie, Freddie, or FHA cannot approve the condo, we will consider the condo and more than likely approve it. Only in rare cases is the condo not approvable. For the programs, you can feel free to visit me on my Facebook page, Justin Friedman. Follow us on Instagram at the Justin Friedman _team, or our YouTube channel, the Justin Friedman team, where this content will also be available to review. So thank you very much, and have a great day.